Good morning. Help us understand how you see the latest data points that you're monitoring across the world. How important is this unwinding of the yen carry trade, and what are the key levels when you look at the Indian equity market?
Yeah, I mean, it's quite interesting as far as the yen carry trade goes. If we look at speculative positioning, it's nowhere near what we saw in 2024, where we saw that big unwind in the yen currency. So really what we focus on as first support for the yen is around the 155 area. But I think the important part is to take away that the speculated positioning is not as significantly short the yen as you were back in 2024. So there's less risk from that positioning aspect. As far as the Indian market goes, we've been in this sort of grinding uptrend from the February-April double bottom pattern that we saw. We had an upside target of 26,300, which we've most recently met, and we've started to see a bit of hesitation and a pullback. But bottom line is, we think for global markets, that is, the 21st of November lows is the key pivot support area. And as long as price action across global markets remain above that lows that we made on the 21st of November, we think that there's still the seasonal strength to come through and likely a positive start to 2026.
Laurence, sorry, just so that our viewers understand this correctly, you are saying that there is a possibility for Indian markets to show the seasonal strength in the month of December and start off 2026 on a positive note. Did I get that correct?
And yeah, that's correct. And we had 26,300 as an initial upside target, which we met. Next year, we can see the market work our way towards 28,800 as the next objective above this 26,300 area.
A lot of people tend to look at the Sensex or the Nifty in correlation with gold and that ratio and how that does. And typically when it reaches certain levels, markets tend to outperform. Now in Indian markets, that is at a lowest level in a long time. Indian markets have consolidated versus other emerging markets actually doing well. Are we setting the stage for not just the start of 2026 to be good, but the rest of 2026 to be okay as well, Laurence?
Yeah, so looking at our outlook for 2026, we see a bit of volatility come through the second and third quarter. Now, I think one of the potential positives for India and the broader emerging markets is that we continue to see weakness in the dollar index. And we're looking at the relative ratio of the EM versus DM ratio continuing to improve through 2026. So outside of some pauses and consolidations, we do think sort of the emerging market and the India setup is that we can trend fairly well through 2026.
Okay. Laurence, good morning. Hiral on this side. Now,
morning.
When we're talking about what you're tracking in terms of levels as well, there will be a couple of sectors that will lead this kind of rally. Overall, currently we are talking about auto metals, which is seeing a strong move. What are charts indicating? If you have to look at 2026, which sectors which sectors are showing you strength?
Yeah, so definitely commodities. I mean, we put out a piece earlier this week just highlighting the broader commodity indices breaking out. And we've also looked at the metal space, metal miners globally breaking out. So there's some of the global ETFs that you can track with those breakouts. And we had copper breakout to new all-time highs. We're getting upside target on the LME copper at over 16,000. For the LME aluminium contract, we're looking at an upside target there of 3,500. Palladium, another base breakout. So just repetitive breakouts coming from the commodity side. So we think the Nifty Metal Index can continue to improve through 2026 and just reiterate its leadership that you've seen in the second half of this year and a continuation of that into 2026. And the precious metals are likewise set to continue their uptrends. They've actually been the lead for commodities over the past 24 months. Silver broke out last Friday. You're looking at an upside target there of 65. And gold ultimately, while it's currently in a consolidation pattern since the October highs, this consolidation pattern that you've seen for gold should provide the platform for a move up to the 5,100 to 5,200 area. So broad-based momentum across the commodity spectrum.
What about financials though, Laurence? And specifically, do you track Nifty Bank closely? The fact that it's hovering around that 60,000 mark and the sheer weightage that it has in the large cap index, I'm just wondering whether you think that there will be a resurgence for private banks heading into 2026.
Well, I mean, I'm glad you brought up private banks, because if we take a step back and we look at NSE banks, split between private banks and PSU banks, the banks index broke out in September, leading the Nifty's breakout above its 200-day. And it's still in a longer-term uptrend. But really what the driver has been is the momentum shown in the PSU banks. So that's been the lead sector if you break down the Nifty Banks Index into those two separate parts. So SBI, Bank of India, Bank of Baroda, you've had strong trends there. We think that the private banks will get a chance to break out of their current consolidation patterns. If you look at HDFC, for example, you've been in a trading range for the past 3 months, and ultimately we think that does set up for a break to the upside. But currently the momentum is with the PSU banks. And if you look at the broader NSE banks, you're in an uptrend. And yes, we've got a longer term upside target of 37,000 on the Nifty, and we think banks will be an important sector driving the index up to that longer term upside target.
Laurence, one question I have with you is in terms of what's happening with the dollar index. It's somewhere around that 99 level. Obviously augurs well when it comes to commodities and metals. From here on, if you have to look at copper, gold, silver, we are constantly at record high levels. Till what extent are you seeing strength in terms of levels if you have to track? And what should be that point where you would say, okay, this is it, from here on, it's time to book profits?
Yeah, well, so let's deal with the dollar first, because that's probably the biggest risk to the commodity trade right now. You'd need to see a close above 100 on the dollar index to suggest any potential weakness on the commodity side. But what we've seen since May is that you've had 3 separate rally attempts in the dollar index back to this 99 to 100, and we failed on 3 occasions. This week, you've actually seen the dollar index roll back from that 100 area. It's broken back below its 50-day. And our measured downside target on this breakdown is to 89 to 90, suggesting another 9 to 10% downside for the dollar index. And like I mentioned earlier on, what we've seen in the commodity side is strong trends and fresh breakouts. That momentum continues to confirm it. So this is the place to remain long and even add exposure, with copper's breakout this week in particular.
In fact, 3% overnight as well. And I love the title on the note, which is Berserk on Commodities. Pretty interesting. Kind of, you read that and the thought process independent of what individual levels might be. But just squeezing in one more commodity question, which is important from an Indian angle, Laurence, which is oil. Now, do you foresee that to have some upsides from where is it right now, or is it subdued prices that we are looking at for oil?
Well, I think starting 2026, we still remain range bound. So the $70 to $71 area has been a major cap. It used to be a floor that sort of OPEC seemed to have cut production at the level. It is a level that we've seen OPEC increase production at over the past 6 months. So that is the sort of line in the sand. If you do get oil above 70 to 71, then yes, there is upside towards the $82 area. But what we've seen currently, it's the commodity that is subdued. And we're not seeing any significant pickup to suggest that we get an imminent breakout.
Laurence, you've spoken about the dollar, and we started the conversation with the yen, but I wonder whether you have an opinion on the rupee, because we've hit that 90 mark, and we've seen a considerable slide in the recent past. Do you track the currency, and do you see any signs of maybe consolidation at this point, or further slide possible?
It's an interesting emerging market currency, because the majority of emerging markets that we track, typically you need to get a strong EM currency showing inflows and outperformance in the equity side. The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
Okay, interesting. Laurence, if I'm to summarize what we've said, and based on what the note that you've written or the recent notes that you've come out with, it seems to me that what you are implying is that 2026 may be a year of many things, but it's certainly a year promising to be for commodities. The strength continues and likely that they will be the big winners at least in the first quarter or the first half of 2026, and therefore that's where bulls could focus on. Would that be a fair assessment?
Absolutely. That's where we've seen the momentum pick up, and we've got the structures in place, you know, in broader commodities. We haven't done anything since 2022, and that's where the momentum's picking up. Absolutely.
And Laurence, because just one more clarification, sorry, just so that people get it right, there are various facets of commodities, right? Between precious metals, copper, zinc, some others, where is it that you see the highest delta playing out, if you will?
Well, this week it's really been the base metals, right? So Ali's continued the acceleration that we had in October, copper this week, and then precious metals have been in the uptrend. They've been in for the past 12 months. We think that continues, but right here it is the acceleration that you've seen in the base metals, copper and Ali in particular.
Laurence, my question to you is, apart from the sectors that we've already spoken about, pharma, FMCG, IT, three sectors, how are you expecting them to perform? Because mixed views coming in terms of IT. You know, you have FMCG, which is still on that consolidation phase right now. And pharma has its own challenges, at least as of now.
Yeah, well, I think the fact that you range bound in all three of those make them funding shorts. If you look at it relative to Nifty, you know, it looks like a place that you really have to be quite selective getting the right stocks, because the broader trends are they in a trading range or grinding lower slowly. So we think all three places are worth being underweight. If I had to single out one where you could try some tactical trades, it would be more in the IT space. You have seen some of the larger cap names show some slowing downside momentum, and you've seen a bit of a pickup in some of the mid cap names within the IT space. So out of those, let's say three underperforming sectors, IT would be top, but pharma and FMCG still look weak and a place to be underweight to fund your overweight positions.
Mid-cap IT is where your bets could be. But thank you, Laurence, so much for joining us on the show. Always a pleasure to speak to you about, and interesting to get you at a time when we're talking about Outlook 2026 as well.